US markets tumbled overnight. The S&P and Nasdaq both pummeled after Donald Trump refused to rule out the possibility of the US heading into a recession off the back of his tariff policies.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition because what we're doing is very big.
Well, let's go to Scott Phillips, the Chief Investment Officer at the Motley. Do you hope Trump knows what he's doing? Because it seems the markets have got the jitters, Scott.
Pete, good morning. We've all got to hope so, mate, because if he doesn't, this is a train crash waiting to happen. Remember, of course, the Atlanta branch of the US Fed is predicting a recession. This is not, this is not your backyard economist having a guess at stuff. This is a branch of the US Fed. The simple reality is, as you say, mate, markets are worried there may be a recession. And I've got to say, Trump unusually, verificating on this one, because normally he would bluster and bluff and say, no, of course not. Or, yes, there will. So, well, I don't know, which is really un-Trump. The reality, mate, is that we know, look, there are very, very few people, regardless of what you think about Trump, right? There are a range of political views. Economically, there are only very, very, very fringe views to just that tariffs are good for the US economy or good for its trading partners. This is populism, unfortunately, dressed up as good ideas. On a first-order impact, tariffs seem great, right? Bringing manufacturing home, supporting jobs in your home country, those things sound like good ideas. The reality is the price is paid by the rest of the economy for those small numbers of jobs created. And that means that inflation goes up. It means economic activity goes backwards. It means living standards drop. And that is the most likely outcome. Now, no guarantees. Trump is doing nothing if not rewriting the rule book. And there's an outside chance that somehow this actually does change what has been true for, frankly, centuries, and all of a sudden makes it a good thing for economies. Really unlikely, but that's where we are. Now, if he pushes ahead on this one, it pushes up prices for Americans. I'm not going to... I will happily, in this time, agree with Trump. I don't do predictions either. But what I will say is that the risks are significantly heightened. The market believes so. We saw big falls on US markets. The Nasdaq off more than 3.5%. The S&P down 2.7% overnight.
So, of course, we should be worried about this too here in Australia, because much of our super is wrapped up in the US markets now, Scott. Yeah,
that's right. Well, I mean, directly, the aluminium steel tariffs start tomorrow, so there's that in the short term. But yes, you're right. It is absolutely going to hit super returns. But, well, here's the other thing, by the way. Directly in the US, is some of our money is invested, absolutely. But also, a lot of it invested here, and our markets tend to follow the US. And so you've got both these things happening at the same time. You've got a US economy and US markets that are bumping along and maybe headed for a tough 2025. If that happens both on a capital markets, i.e. share markets basis, and an economic basis, we're going to have little chance but to follow at least, hopefully, a very shallow echo. But we will have the same impact they feel imported on us, because the US is the world's largest economy and the world's largest consumer economy by a long way.
Yeah. It'll be right in the long run, but just in the short term, maybe don't log in to your accounts or your super accounts or whatever,
very good strategy.
That could be a little scary. Thanks, Scott. Talk to you later on.